They created a bubble with all of this cheap money. The housing market, the equity markets, the economies should have crashed in Europe, should have crashed in Australia, should have crashed in the United States. They pumped in unprecedented amounts of cheap money between the central banks lowering interest rates the way they did and the governments flooding in all of this cheap dough. They created a bubble of unprecedented size in modern history. We've seen nothing like this. So what's going to happen? Well, here in the States, the housing prices estimate went up 40% in 2 years. Wait a minute, 40% in 2 years? While businesses are going out of business? How could this happen? All right, so is there going to be a correction? Yes, there's going to be a correction. But think of how high it went. Are you going to see a 40% decline? We don't believe so. But there are the wild cards. And that's why, when people say, I always make it clear, no, nobody could predict the future. We do trend forecasts. There are too many wild cards, whether they're made by nature or humans. So let's look at the two wild cards being played now. And we got to talk about inflation and what's going to wear things. The Ukraine war, crazy wild card. Who would have thought of this would have happened? Oh, three things. And now it's over there in Australia, United States, those lousy Chinese, we got to do everything we can to stop them. Okay. You're going to fight the Chinese? You're going to bring that up now? How dare they take Taiwan? What the hell do I care? This has been going on with the Ming Dynasty in there for how many centuries? Oh, no, we have to stop it. We have to bring freedom and democracy. Oh, yeah, you Australians. Yeah, wasn't Gallipoli great? Did a terrific job. And now what's going on in the Middle East? Not my words, but from the Financial Times, the Wall Street Journal, the extreme right-wing government of Netanyahu and Israel. And now they're talking about, will they attack Iran? Okay, attack Iran. Now I'm mentioning all this because of the wild cards. And the wildest of the wild cards is more inflation. And what the inflation number is going to blow up is if there is a military conflict in the Middle East between Israel and Iran. They have protests going on now in Israel every week. Hundreds of thousands of people taking to the streets because of the judicial reform they want to do, which basically means there is no judicial anything. The politicians are in full control. So the people are taking to the streets. One of my sayings is when all else fails, they take you to war. If there's a military conflict, you're going to see oil prices, Brent crude go to above $130 a barrel, US dollars. That will crash the economies and it will crash equity markets, housing markets. It will bring everything down big time. So we don't know where that's going to go. The same thing with the Ukraine war. If this thing continues to escalate, energy prices are going to keep going up. So will there be a housing? Yes, the housing's definitely going to go down. But the bigger one in the States is the commercial office sector. We have an occupancy rate, according to Castle, 50.4% office occupancy rate. Wait a minute. Half the people are going back to work than before the COVID war? Yeah, that's right. How about all the businesses that depended on commuters going out of business? A third of the dry cleaners are dried up, gone. Now look at the hotels that used to have business travel. Business travel has not come back. It's not going to come back. And the office sector, building sector was already overbuilt before all this happened. Now let's go back to you talking about raising interest rates. Oh, now you got to pay more on those variable rate loans while you have less tenants. You are going to see a crash. It's an office building bust that the mainstream media is now just barely talking about, that we warned about 3 years ago. That's the one to keep your eye on big. In the States, yes, we're going to see a decline. New mortgage applications in America just hit a 28-year low. Now you're going to raise interest rates. Mortgage rates are going to go up. That's going to keep going down. But here's the difference. When we had the bust that happened with the panic of '08, we had the subprime mortgages, the banks, the gangsters. Hey, you don't have a job? You're deep in debt? Don't worry about it. Here, sign over here and you can buy a house. That didn't happen this time. So yes, you're going to see a sell-off. But we don't see a bust in the States yet. As I said, when all else fails, they take you to war. They get your minds right off it. What followed the Great Depression? What followed the dot-com bust? The war on terror. Our magazine, the Trends Journal, in October 1999, we had forecast dot-com bust by the second quarter of 2000. And it did. Busted in March of 2000. The NASDAQ was down like, some 60-something% before 9/11. We're going into a steep recession. 9/11 happens. You got a little clown of a nobody boy, a daddy's boy born on third base, George W. Bush. We're going to get that guy Osama bin Laden dead or alive. 88% of the people swallowed the crap coming out of that clown's mouth. Forgot all about the dot-com bust. And then they created next bubble with the housing market and the derivative scam. They're going to do the same thing now. You go to war, it brings profits up. People get their minds off it. And I believe that's what they're doing. They keep selling war, and it gets the people's minds off of the problems that are existing. And we're talking about the whole system and central banks. We had a clown arrogant, you're talking about taxes. Woodrow Wilson gave us World War I, gave us the Federal Reserve, and gave us federal income tax. We didn't have them before that. We need those tax. We're a Yankee Doodle dandy, a Yankee Doodle do or die. Do or die? Oh yeah, we got to go over there and save the world. And the people march off. They're doing the same thing now. People have no idea of anything. All they do is swallow the headline crap. We are in for the worst socioeconomic and geopolitical disaster in modern history. And look how low it's all gone for everybody. 64% of Americans are living paycheck to paycheck. You go to LA, you want to see homeless, San Francisco? Before I left my heart in San Francisco, you bet you did. Holy, well, I can't believe what the place looks like. One after another. America's middle class has shrunk 11% since 1970. This was the land of opportunity. Now, get a job at Walmart, get a job at Costco, get a job at Hannaford, get a job at when I was a young guy, they had hardware stores, stationery stores, drugstores, grocery stores, all gone. The chains own everything. Chains, the chains. And all we are plantation workers chained to the chains. And again, I just gave you the data. Oh, I forgot one. When the arrogant bankster bandits brought those interest rates down and the government's pumped in all that money, that cheap dough, merger and acquisition activity in 2021 hit an all-time high. Bigs got bigger. The bigs got bigger. They could give a flying crap about the people. The reason I don't believe a word that Powell or Yellen yells out is by their deeds you shall know them. So let's go back to 2021 as inflation is skyrocketing and they come out with all the arrogance that, no, this isn't inflation. It's only temporary. Right. And as inflation keeps going and going, well, no, it's not temporary, but it's transitory. And not only in the United States, over there in the EU as well, with Lagarde saying this isn't real, it's going to go away. So what they've raised rates compared to inflation, and then when you look at John Williams' shadow stats, the inflation number is actually double this, not 7%, but more like 15%. Because they take out things, the home prices that went up 40% over 2 years. No, we're going to put them in there. No, we're going to make up a new thing. We put rentals in there and other things. Oh, and you're not eating steak anymore, so that didn't go up. You're eating chopped meat. So the numbers are rigged. So going back to what are they going to do? And you can't believe anything that they're saying, as I see it, because of the lies or ignorance that they've said before. Number two, they're not blaming. They're coming out and saying that inflation is caused by the supply chain disruptions. And you know what else? Rising wages. So now what we're going to do is slow down the economy so wages go down. From Wall Street Journal, January 7th, Dow jumps 700 points on signs of moderating wage gains. Quote, investors are celebrating the fact that the average hourly earnings number was less than expected, says Michael Arone, chief investment strategist of State Street Global Advisors. Quote, there was fear going in that wage inflation would remain high. the United States government dumping in over $6 trillion of fake money to artificially prop up the economy during the COVID war, bringing the interest rates down to nothing. So you had the housing boom and merger and acquisition activity in 2021 hit an all-time high. So going back to where it's going, it depends on what they do with interest rates. If they raise interest rates 50 basis points, the markets are going to go down really big and hard. That's the way I forecast it. Long term, they're going to lower interest rates. They do it all the time for the party in power. Again, we're forecasting a market meltdown if they continue to do what they're saying they're going to do.
Right.
We can't predict what they're going to do. For example, in 2012, I thought the markets were going to crash. They didn't teach me about zero interest rate policy and a thing called quantitative easing in Economics 101 or graduate school. They'll make up anything. So we don't know what they're going to make up. If they stay the course to what they're saying, then we see a market meltdown. But even overall, if they raise interest rates only 25 basis points, it's still going to have a lot of negative effect on the rest of the economy. The markets will do okay, but the rest of the economy won't. Again, you're looking at the headlines over how happy they are that the people are earning less wages.
So let's hear what your outlook is then for the global economy.
It's down. I mean, looking at the emerging markets, they're submerging really deeply. They have all this debt, a lot of it's dollar-based, and the dollar's still much stronger than it was before. And they're going to go down really hard. Again, the damage done by the COVID war is incalculable. Look, one of our top trends is office building bust. You're looking at office occupancy rate, and you could go to the data, look it up, Castle, any of them. At best, it's 50% of what it was before the COVID war when launched in China on Chinese Lunar New Year 2020, the year of the rat. All the businesses that depended on commuters, they're going out of business. All of the office space, the occupancy rates, they're hitting new highs. So now you are an owner of an office building. I'm not going to take 15 floors anymore, somebody says, because I have people working remote, even though they're only coming in 2 days a week. I'm going to save myself money. And I'm the landlord. I own this building and I got to pay my mortgage. Oh, and interest rates went up and you got variable rate mortgage on this? And now you're looking globally. You're looking in Europe at a 46% office occupancy rate. Places like London, 35%. All the businesses that depended on it. I'm telling you, the damage that has been done by the COVID war, not only financially, but spiritually, emotionally, physically. So what we're saying is the economic situation is only artificially being covered up by the markets. When the markets go down, then the rest of the people in the economy know how bad it is. Every week we do a office unemployment numbers, the people leaving jobs. One company after another, firing. Goldman Sachs just fired how many? Amazon just let go of how many? This one let go of how many? When did you ever see this? Day after day after day after day after day. Oh, and then the new numbers came out. Oh, they weren't that bad. Oh, yeah, you mean the jobs that the people were taking, the numbers that went up? People were taking second jobs and third jobs that pay very low wages because 63% of Americans are living paycheck to paycheck.
So you're saying that the disconnect between Wall Street and Main Street is even worse than what we think it is?
Absolutely. And when Wall Street goes down, then it becomes the reality. That's the reality on the street doesn't count. It's only when Wall Street goes down. Oh, it's like a football player got a heart attack. My mother died of a heart attack. Nobody cared. Oh, but that was a football player. You see what I'm telling you? They ramp it up. They only make important things, what they think is important to keep the people's mind on it. And then what you look at the median household income, what is it, 60 something, $70,000? So you're going to see a big crash, car sales going down, one thing after another. Look at all the stores closing down. It's in front of everybody's eyes. The layoffs, the layoffs, the layoffs, the layoffs. Again, it was artificially propped up by the bankster bandits in the government.
What